Welcome to ZICA Academy YouTube channel. In this lecture, I want to examine IAS 7 Statement of Cash Flows Direct Method using question from ICAN May 2024 Financial Reporting question number 1. If you are coming across my lecture for the first time, please like the video, share it with others and subscribe so that you don't miss my upcoming videos. If you are a returning subscriber, thank you for being part of this channel. ICAN May 2024 Financial Reporting question number 1. Badri PLC's statement of financial position as at March 31st, 2021 and 2020. You have the assets for March 2021, 31st of March 2020. Non-current assets amounting 1,000 naira. Property, plant and equipment 350,000 for 2021 and 110,000 for 2020. Investment 60,000 and 30,000 respectively. The non-current asset is totaled for 10,000 and 140,000. Then we have current assets, which include inventories 295,000 and 120,000. Trade receivables 90,000 and 60,000. Bank 15,000 and 40,000. The current asset totaled 400,000 and 220,000. Total assets 810,000 and 360,000 for 2021 and 2020 respectively. Equity and liabilities. Ordinary share capital of 80 kobo per share, 220,000 and 120,000. Share premium of 60,000 and 30,000. Retained earnings 280,000, 119,000. Equity total 560,000 and 269,000. We have non-current liabilities, 10% redeemable loan notes, 50,000 and 10,000. Current liabilities, which include trade payables, 65,000 and 14,000. Taxation 17,000, 12,000. Bank overdraft 25,000 and 5,000. Accrued expenses 40,000 and 50,000. The current liability total 200,000 and 81,000. Total liabilities is amounted to 250,000 and 91,000. Total equity and liabilities 810,000 and 360,000 for 2021 and 2020 respectively. Statement of profit or loss for the year ended March 31st, 2021, amount in 1,000 naira. Revenue 490,000. Cost of sales 222,000 naira. Gross profit 268,000. Administrative expenses 90,000. Distribution cost 40,000. Finance cost 5,000. Dividend receipt 153,500. Then the net difference between expenses and dividend received is 18,500. We have profit before taxation 286,500. We have income tax expense 70,000. Profit for the year 216,500. Additional information. 1. During the year ended March 31st, 2021, plant and equipment with a carrying amount of 40 million naira was sold for 55 million naira. The profit or loss on disposal was charged to distribution expenses. 2. Dividend of 2 kobo per share was paid during the year ended March 31st, 2021. 3. Depreciation charge for the year was 10 million naira on furniture and 30 million naira on plant and equipment. During the year, note 4, during the year, an investment which cost 12.5 million naira some years ago was disposed for 20 million naira. The profit or loss on disposal was charged to administrative expenses. Note 5. Dividends received were from investment in shares and immediate disposal of right issue from the investment in shares in a blue chip company. You are required to A. Prepare statement of cash flows of Badri PLC for the year ended March 31st, 2021 using direct method in accordance with IAS 7. B. Discuss the profitability, gearing and investor stake in Badri PLC and recommend strategies for improving or sustaining them. Now let's have the solution to the question. The name of the entity is Badri PLC. So we have Badri PLC. Statement of cash flows for the year ended March 31st, 2021. So you have to use direct method. Direct method. The first heading is operating activities. Operating activities. If you have watched my earlier video on statement of cash flows, I've told you that operating activities are those activities that arises from the normal course of business. Now, cash flows under this heading include cash received from customers. That is working number one. Cash received from customers. Now, let me have working one. Cash received from customers. I will advise you watch my earlier presentation on this topic, statement of cash flows using direct method. You can look for financial reporting by ZICA Academy. Just look for playlist. Financial ICAN can search for ZICA Academy playlist on financial reporting. So you will see all the available video on FR. So as usual, we normally start with the opening balance. Opening balance. Remember, I've told you that all the opening balances will be found in the opening statement of financial position. The opening balance in respect of trade receivables amounted to 60,000, while the closing balance is 19,000. Remember, this is 2020. The figure you have in this column is your opening balance, while the figures you have in this column is your closing balance. So our opening balance is amounted to 60,000. So we have 60,000. After your opening balance, you add your revenue. Revenue will be obtained from the statement of profit or loss. Now, how much is our revenue? Our revenue amounted to 490,000 naira. 490,000. So 490,000. That is the revenue. There's nothing like bad debts or allowances for receivable. There's no bad debts written off. So if you sum up this, you have 550,000. We don't have bad debts, we don't have discount allowed. So you have your closing balance. Closing balance. That is your trade receivables. No, this is opening balance in respect of trade receivables. So, how much is the closing balance? Trade receivables. The closing balance amounted to 90,000. So we have 90,000. If you subtract 90,000 from 550,000, then you'll be left with 460,000. That is the cash received from customers. 460,000. Then the next item is cash paid to suppliers. Cash paid to suppliers, working number 2. Working 2, cash working 2. Cash paid to suppliers. As usual, you start with the opening balance in respect of trade payables. Opening balance, your trade payables, which will be obtained under current liabilities. How much is the opening balance? So current liability, we have trade payables. Opening balance amounted to 14,000, while the closing balance amounted to 65,000. So 14,000 is the opening balance, 14,000. So we add purchases. I've told you that the figure of purchase will not be given. So you will need to look for it. To look for purchase, you start with cost of sales. Please go through my earlier video on this topic. Cost of sales amounted to 222,000. 222,000. 222,000. We had the closing inventory. You had the closing inventories under current assets. Our closing inventory amounted to 295,000, while the opening inventory is 120,000. So closing inventory 295,000. You add it, you subtract the opening inventories. Opening inventories under current assets, and that amounted to 120,000. So after these adjustments, we have 222,000 plus 295,000 minus 120,000. So we have 397,000. That is our purchase. 397,000. If you add it to the opening balance of payables, which is 14,000 plus 14,000, then you have 411,000. Then we now have the closing balance. Closing balance in respect of trade payables. Payables. How much is the closing balance? Current liability. The closing balance amounted to 65,000. So you subtract the 65,000. 65,000. You subtract 65,000 from 411,000. So we have 346,000. 346,000. That is the cash paid to suppliers. 346,000. You normally subtract that. Then after cash paid to suppliers, we have operating cash expense paid. Let me have this as working number 3. Working number 3, operating cash expense amount in 1,000. As usual, we normally start with the opening balance. Opening balance. In case you have opening balance in respect of accruals, which will be found under current liability. And how much is the opening balance? We have accrued expenses. Opening balance amounted to 50,000, while the closing balance amounted to 40,000. So opening balance now, 50,000. After this, we are going to deal with the administrative expenses. And distribution costs. Now, back to the statement of profit or loss. Administrative expenses amounted to 90 million and distribution cost amounted to 40 million. So we have 90 million and 40 million. Then you now go through the additional information in order to ascertain if there are any items that affect the either distribution or administrative expenses. Now, note 1. During the year ended March 31st, 2021, plant and equipment with a carrying amount of 40 million was sold for 55 million. The profit or loss on disposal was charged to distribution expenses. Now, the proceed is 55 million and the carrying amount amounted to 40 million. The proceed is greater than the carrying amount. The excess of carrying amount over the excess of the sales proceed over the carrying amount, that is the profit from disposal. But if where the carrying amount exceeds the sales proceed, excess of the carrying amount over sales proceed, that is loss from disposal. Remember, now you are having profit from disposal, which is 55 million minus 40 million. We have 15 million. So we have profit from disposal. Profit or losses follows accrual basis. Remember, you are converting from accrual to cash. So those accrual items, you will need to eliminate it. Profit from disposal of plant and equipment. Proceed 55 million. Carrying amount 40 million. You have the profit of 15 million. You know, when you were preparing the statement of profit or loss, expenses is having a debit balance, while profit is having a credit balance. And that means since you are having profit now and it has been charged to administrative expenses, that means profit will have been subtracted from administrative expenses, because administrative expenses is having a debit balance while profit is having a credit balance. They are having different balances. You are going to net it. That means profit will have been subtracted. So you are adding it back now when we are converting accrual financial statement to cash. Now, back to the note 2. Note 2, dividends of 2 kobo per share was paid during the year ended March 31st, 2021. So that does not affect either admin or distribution cost. Note 3, depreciation charge for the year was 10 million on furniture and 30 million on plant and equipment. Depreciation follows accrual basis, so you are going to eliminate the impact. Depreciation, furniture 10 million, that of plants, you have plant and equipment, that is 30 million. The total depreciation for the year amounted to 40 million. Depreciation is an expense, so that means it will have increased the expenses, so you subtract it because it doesn't involve the flows of cash. Back to the note. Note 4. During the year, an investment which cost 12.5 million some years ago was disposed for 20 million. The profit or loss on disposal was charged to administrative expenses because this affects the administrative expenses. Now, the cost is 12.5 while it was sold for 20 million. That means it was sold at a profit. Profit from sale of investment, profit from sale of investment. The proceeds is 20 million minus cost of 12.5 million. Being a profit of 7.5 million, profit will be added. Profit will be added. The note 5 is dividend received, and it doesn't affect either admin or distribution cost. So as a result of that, what is the total of this? 50 plus 90, that is 140 plus 40, that is 180. 180 million plus 15 million, then minus 40 million plus 7.5. So you have 162.5 million. We have closing balance. Closing balance in respect of accruals. Then under current liability. How much is our closing balance? We have accrued expenses, 40 million. Accrued expenses, 40 million. If you subtract 40 million from 162.5 million, then you'll be left with 122.5 million. That is the operating cash expense paid. Now, 122.5 million. Then the next item is interest paid. Then under current liability, Let's check if you have interest payable there. Then we have trade payable, taxation, bank overdraft, accrued expenses. There is no interest payable. That is to show that the entire interest due for the period has been paid. Now go through the profit and loss. You have the finance cost. That is the amount of interest expense for the period of 5 million. So since there is no interest payable under current liability, the entire finance cost is deemed to have been paid for the period. So the finance cost of 5 million has been paid. That is why you do not have any interest payable under current liability. After the finance cost, the next item is taxes paid. Taxes paid. Now let me have that as working number 4. 4. Taxes paid. As usual, we normally start with the opening balance. Opening balance. We check our current liability and non-current liability. Non-current liabilities, we only have 10% redeemable loan notes. Then under current liability, you have taxation. The opening balance is 12 million, while the closing balance is 17 million. You are starting with the opening balance. Current tax, 12 million is the opening balance. Then from the statement of profit or loss, you have tax expense there. Tax expense in the statement of profit or loss. And how much is that? Income tax expense, 70 million. So you add 70 million. So total will be 82 million. Then you have the closing balance. Closing balance. Under current liability, you have current income tax. So how much is that? The closing balance, taxation, you have 70 million. 70 million. So we subtract the 70 million. 70 million. So we have 12 million. That is taxes paid. That is taxes paid. 12 million is the amount of tax paid for the period. So now, let's roll it to total. 460 million minus 346 million minus 122.5 million minus 5 million minus 12 million. So you have 25.5 million negative. This is net cash flows from operating activities. After operating activity, the next heading is investing activities. Remember, I've told you that investing activities are those activities that result in changes in non-current assets and investment. So let's have investing activities. So I've told you that whenever you get to this section of the statement of cash flows, you check the movement in non-current assets. So our non-current assets include property, plant, and equipment. The opening balance 110, closing balance 350. So let's have working number 5. Movement in property, plant, and equipment. The opening balance from the statement of financial position. Opening balance, that is 110 million. 110 million. Let's go through the notes. What are those items that affect PPE? During the year ended March 31st, 2021, plant and equipment with carrying amount of 40 million was sold for 55 million. This proceeds will be reported as investing activities, while the carrying amount will be deducted from the movement in PPE. Now, we have disposal disposal 40 million, the carrying amount. Now, proceeds from sale of PPE, sale of property, plant, and equipment. So, from that same note 1, you have the proceeds of 55 million. That proceed will be reported as investing activity, 55 million. Then, back to the note. Note 2 is about dividends. Note 3, depreciation charge for the year was 10 million on furniture and 30 million on plant and equipment. So depreciation, 10 million on furniture and 30 million on plant and equipment. Total 40 million. So note 4 is investment. So 110 million minus 40 minus 40. That is 30 million. Then you have the closing balance. Closing balance in respect of PPE. How much is the closing balance? So you have property, plant, and equipment, 350 million. The closing balance amounted to 350 million. Since the closing balance is greater than this, that means more PPE have been acquired, which is 320 million. That is acquisition of PPE, 320 million. So acquisition of PPE, that is working number 5, which is 320 million. And now flows. Then after property, plant, and equipment, you also have investments. Investment, the opening balance is 30 million, while the closing balance is 60 million. Let's have working number 6. Movement in investment. Working number 6. Movement in investment. As usual, we normally start with the opening balance. Opening balance in respect of the investment. From the statement of financial position, we have 30 million. Note 4. During the year, an investment which cost 12.5 million some years ago was disposed for 20 million. The profit or loss on disposal was charged to administrative expenses. So you have the cost of that investment is 12 million. So when it is disposed, so you recognize it. So disposal, 12.5 million. So if you subtract 12.5 million from 30 million, so you have 17.5 million. Then compare this with the closing balance. Closing balance in respect of investment from the closing statement of financial position. You have 60 million. So this closing balance is greater. That is to show that there is an acquisition of more investment. There are further acquisitions during the year of 42.5 million. So acquisition of investment. So acquisition working number 6. That is 42.5 million. More cash goes out of the entity. Then proceeds from sale of investment. Additional information number Number 4 was disposed for 20 million. The proceed is 20 million. 20 million. If you go through the statement of profit or loss, you have dividend received, 153.5 million. And if you check note 5, we were told that dividend received were from investment in shares and immediate disposal of rights issue from the investment in shares in a blue chip company. So dividend received will be reported as investing activities. So if you go through the current assets, we do not have dividend receivables. That means that 153.5 million have been received. So we have dividend received. That is from statement of profit or loss. That dividend received is 153.5 million. So that will be reported as investing activities. So now let's sum it up. So we have 55 million minus 320,000 minus 42.5 plus 20,000 plus 153.5 million. So we have one negative 134,000. That is net cash flows from investing activities, which is negative 134,000. Negative 134,000. Let me reconfirm that 55,000 minus 320,000 minus 42,500 plus 20,000 plus 153,500. So 134,000. That is investing activities. After investing activity, the next heading is financing activities. Financing activities. I've told you that these are activities that result in changes in equity and borrowings. I've told you that whenever you get to this section of the statement of cash flows, you check the movement in equity. Now, let me have work number 7. Movement in equity shares. Movement in equity shares. As usual, you are starting with the opening balance. Opening balance. So we'll be putting together both ordinary share and share premium. Ordinary share and share premium. Back to the question, the equity section. You have ordinary share capital of 80 kobo per share. 120,000 is the opening balance, while the share premium is 30,000. So we have 120,000 share premium, 30,000. We did not have any information about bonus issue. So addition of this is 150,000. Then you have the closing balances. Closing balances, which include ordinary share and the share premium. How much is our ordinary share? We have ordinary share of 220,000, share premium of 60,000. 220,000 and 60,000. So if you subtract that, 150,000, the addition of this is 280. 280,000. 150,000 minus 280,000. So you have 130,000. 130,000. The closing balance is greater. That means there are further issue of shares during the period. So we have issue of shares. Working number 7. Working 7. That amounted to 130,000 inflows. Then after issue of shares, let's go through the equity section. You have retained earnings. Retained earnings. The opening balance is 119,000, while the closing balance is 280,000. Now let's have working number 8. Movement in retained earnings during the period. Movement, working number 8. Movement in retained earnings. So we have the opening balance. Opening balance. How much is your retained earnings at the beginning? Retained earnings, 119,000. 119,000. 119,000. Then from the statement of profit or loss, you have profit for the year. Now, let's go back to the statement of profit or loss. How much is the profit for the year? Profit for the year, 216,500. 216,500. Now, let's sum it up. 119,000 plus 216,500. You have 335,500. 335,500. Then the closing balance. Closing balance. That is your retained earnings at the end of the period. Go back to the equity section. We have 280,000. 280,000. So if you subtract 280,000, 280,000 minus 280,000. Difference is 55,500. 55,500. That is dividend paid. Dividend paid. That is working number 8. So now let's have dividend paid. It's like we have a note on as regards this. 220 million divided by 80 kobo. 220 million divided by 0.8. Then that means we'll be having 275 million. That is the number of shares outstanding. And if you now go back to the note 2, dividend of 2 kobo per share was paid during the year ended. So if you calculate 2 kobo times 0.02 of that, then you're left with 55.5 million. So that agrees with what was obtained here. Working 8, we have 55,500 negative. Then we've done with the equity. Then we have non-current liability, where we have 10% redeemable loan notes. The opening balance amounted to 10 million naira, while the closing balance is 50 million. We have the increase in 10% redeemable loan notes, increase of 40 million. So we have issue of 10% redeemable loan note. Opening balance 10 million. Closing balance is 50 million. Increase of 40 million. Then we've done with every necessary information that needs to be included in our statement of cash flows. Now let's roll it to total. 130 million minus 55.5 million, then plus 40 million. Then we have 114.5 million. That is net cash flows from financing activity. We have 114.5 million positive. Now, start with your operating activity. You have net cash flow from operating activity to be minus 25.5 million. That of investing activity, we have minus 134 million. Then financing activity, we have plus 114.5 million. Then we have the net cash change of 45 million negative. Net cash change minus 45 million. After this, you have the cash or cash equivalent at the beginning of the period. Cash or cash equivalent at the beginning of the period. Now, if you go through the current assets, you have the bank of 40 million in the opening balance. Bank of 40 million. Then, under the current liability, you equally have a bank overdraft of 5 million. Remember, the bank you have under current asset is a positive balance, while an overdraft is a negative balance. You have 40 million minus 5 million, then you have 40 million positive balance minus 5 million negative balance, which is an overdraft. Then you have 35 million. 35 million positive. Then minus 45 million plus 35 million. You have minus 45 million plus 35 million. That is minus 10 million. This is cash or cash equivalent at the end of the period. Then we want to analyze the component or what constitutes this 10 million. We want to analyze it. Analysis of cash or cash equivalent at the end of the period. So you have bank under current assets. Current assets. Bank 15 million. 15 million. Under current liability, you have bank overdraft 25 million. Bank overdraft 25 million. The overdraft is a negative balance. Plus 15 minus 25, that will be minus 10 million. This is cash or cash equivalent at the end. If you check your closing balance from the statement of cash flows, you discover that it agrees with what was obtained. This is the solution to the first part of the question. I'm going to end the video here. The second part of the video, which involves the ratio analysis, will be discussed in another video. Please make sure you drop the love emoji, like the video as well, share it with others, and subscribe. Thanks for watching ZICA.